Hey everybody, Trendy John from Simpler Trading. So I had to go over these SPX trades because they were just so amazing. I loved them. They made me a lot of money, and I feel very fortunate. And I also shared these trades with you last week in a video. So if you have not seen that video, it is on my YouTube page. I sent it out an alert, but I just want to go over it really quick with you. As you guys know, we had the 100 wides. I ended up trimming those on Friday for about 28%, trimming them at $17. And then later on, coming into today, we had this very wide call credit spread that was deep in the money. And what's really cool about it is I specifically went over the emotions of the traders who were sitting in those trades, right? I told you that they were deep in the money, that they felt like, hey, there's nothing that can go wrong. And I think that's a big, that's the thing is a lot of people think just because you're deep in the money that you can't lose value. I want you to think about these traders. Go back to that first video and remember how much those 6,000 calls were when we first did that video last week, right? Those things were just super expensive. I mean, super expensive, right? Probably somewhere in the ballpark of, I don't know, $15,000 a piece or something. But at the end of the day, we opened up this morning and they weren't worth a whole lot. Now, I want to talk about this trade because it was actually very difficult to get filled. So as soon as the market opened, we spiked in the ES futures, which means this SPX was spiking. We did good. We were in future trades, but I was a little annoyed because I really was trying to get about $10 on a buyback. Now, if you recall, we took in $43, I believe, in credit. So that means $4,300 we took in credit. My overall risk was going to be $700. So it was a 50 wide. So 50 minus that 43 equals $700 of risk and a potential that I could walk home with, $4,300. Now, most cases when you do something like this, you're only looking to take a percentage of that credit. So we got very lucky in the fact that the market dumped, and these basically ended up giving us a lot of cash for our contracts. Okay. So again, 1545. So we ended up taking in, if we just take a calculator really quick, and you take that 4,300 minus the 1545. And so we took in about $2,755 per contract there. So an awesome trade, small risk. So again, risk was 700. Overall reward was 27 and some change. That's amazing. And then as we went on with the day, we're going to keep going down. These right here, these are puts that we were in. So we were buying puts on Nvidia when most people weren't even thinking about it. And this paid over 350% on these trades here. These were amazing. They made us a lot of money. Very, very happy about that trade. Then we get down here to the 100 wides. I'm going to tell you something what I'm learning about these 100 wides. They're really fun. You know, they're fun because they're wide, and I was explaining today, a lot of traders, we love to trade anywhere from, 10 wide to 25 wide, but most of the time somewhere in that ballpark. 100 wide is a little bit more, um, what's the right word? It's a little bit more difficult to wrap your thought process around because they're so expensive, like a one wide or sorry, a 10 wide, we're typically paying, maybe $1.80 to 250, you know, um, and so your risk is about 250 bucks and you can make about 800, $700 from those trades. This was, more in the ballpark again of $1,300. We paid to $1,700, but you could make up the difference, right? So if it's 100 wide and you minus, say, that 13, then the difference is how much you can make. What's hard about these is that I still had until Monday. So we got the big dump. We were down like 150 this morning. I was a little concerned we were going to break through all of the, not only the body, but also the wings on the side. So I wasn't sure if they were going to be profitable or not. But I also knew we had a lot of time, so I was really happy about that. But then I noticed I could come in here and get, about $24.55 per contract. That also was really, really good. If you come up here and look at the entry, and I'm just going to scroll up here, right here at 1320, and then we come down here to back to where we were, sorry, 1320. Let's pull out that calculator again. All right, so 2455 minus 13.20. So we're able to bring in $1,135 per contract on that trade. So that one was a really nice trade as well. I mean, you put those together if you had several contracts, you're looking at a good $4,000 to $5,000 per contract if you were to look at it that way today. I know a lot of traders that did really well, and I hope you did well as well. Let's talk about some other trades. I had Apple. Am I lucky? I mean, I don't know. I'm just using supply and demand. In these trades, I was able to make 70% there. You guys can see that. I got into some Meta. That was yesterday or last week. I can't remember now. I think it was yesterday. This ended up doing really well. We got about 40% off of that trade. And this is a trade that I follow John on. I went ahead and added. I mean, it's super inexpensive. So I went ahead and added. Who knows? This thing took such a big dump, and I kind of figured that. We reviewed it in the room, and it was headed to a demand zone. I'll show you that here in a second. And so, we're close to that demand zone. So who knows? I don't know much about A Lab. I don't know how much it moves, but what I do know is it moved a lot to the downside. Meta, what I did was take some of the profits from today and I bought this crazy trade going into earnings. And I bought the 750 and sold the 800. I paid $1.92. That is my overall risk. This is a really small trade, so I'm okay if this goes to zero. This particular trade is $50 wide. So let's just round it up to two. All right. So again, this is kind of like that credit spread thing I did, right? But this is not a credit spread. This is called a debit spread. So it's 50 wide and it cost me, let's just say two. Okay. So that means I could make up to $4,800 on this one contract if for some reason Zuck just sends this baby to the moon. It's a low probability, but I've also had some amazing trades in Meta doing these type of out of the monies because they tend to do really, really well on their earnings. So, who knows? We'll see, guys. It's not really that far off. This would be a stellar earnings. It'd probably be somewhere between 17 and 20% earnings. But what I liked about it was that you have some Mag 7 that are reporting, but you have Jerome speaking. So if everything were to line up, I think we could see 700 plus in this name. So, anyways, moving on down here, I went ahead, in the central room, I showed you guys how to put in and program your options to take a trade when price is moving down. And you don't have to be there at the chart. This was that one that I showed you in the central room. I was executed at $7.73. So that is my risk on that trade. I think we're up after hours right now. Basically, I was looking for the 119 to 120. We did flush that level just a little bit more, which was okay because we bought a little bit of time here, February 28th. And then moving on down, I went ahead and shorted Google. These are already up 30%. We bought time with these. I'm not going to show you that on a chart, but if you were in the room, you know why I took that trade. Again, those are already profitable. And then Apple, these were a profitable trade as well. I was layered in Apple. I took some of that off. This was a trade that I took in Ashley's account that went to zero. I was like, well, maybe because a lot of times when we can't get up and over certain levels and we had a big down day, I was looking for the SPX to potentially dump into the close. It didn't do that, so I ended up losing a very small $200 out of all the profits I made. And again, I was just trying to basically roll that 12 at the craps table to see if that happened, but it did not. J&J, these are part of a leap trades that we have on. This is just a trim. And again, we have until January 16th, 2026. For me, the added bonus was that those were up already 70%, which is pretty amazing. And then MU, I took this in Ashley's account as well. These were up 50% on today's close. I tweeted that out. So make sure you guys are following me, please, please, on Twitter, and also stay engaged, folks. Stay engaged. Hit the like on those. Tell me your testimonial. Let me know how you're doing. I love to see it, right? And again, remember, um, if you get involved out there, it gets me more pumped up. And, shoot, I've been up since 1 o'clock this morning, folks. So I will not stop working for you, but you are my fuel. You know what I'm saying? So I need that encouragement. Those were looking good. I went ahead and trimmed at 38%. And like I said, closed. I didn't close, but we closed today at plus 50%. Talking about the futures, I'm up. I'm still in the futures. Sorry, I'm layered into futures. They're pretty flat this morning. Oh, one thing that I did want to go over here, let's bring that back up. Okay, first of all, I do not have a Discord room. Don't ask me if you could get into the Discord room. I'm only here at Simpler Trading. It's just that we kept the old room before I got bought out, and I keep all my trades in here so that I can have documents and stuff like that. But if we come over to the alert section here, you guys can see in here, I went ahead and put a iron fly on right before the close. And that's only 25 wide. So basically what I'm saying tomorrow is that the market is going to be just pretty choppy after such a big down day, and we're just going to sit and wait for bigger earnings. Who knows? Maybe Boeing does really well, but I think it will impact the Dow a little bit more than it will the ES futures or the NASDAQ. Think those will be pretty quiet tomorrow. But anyways, I took in a credit here of $20.50. And again, these are 25 wide. So if you do the math, this is $450 of risk. And all I'm looking to do is basically take somewhere between um, I don't know, probably 10 to 25% of the received credit. And again, if we have a huge spike up or a huge spike down, it doesn't mean this is not going to work, but we really need to stay within a pretty tight threshold before the close. So again, 25 points on each side of that 6,000 strike. Okay. All right. Other than that, that is the alerts. Now let's go into the SPX chart and take a look there. So on SPX, today we closed 89 points down, 1.46%. Far as like what I'm looking for, everything happened perfectly. We got up into target. Well, first of all, let's just go over how we played this, right? So price hit the supply zone, it came down into demand zone. We had a really good time here trading to the upside. And then as we got a little extended here in the supply zone, this is where I sold credit and gave you guys that video. This is where we did the 100 wide butterfly to the downside. And sure, you could say we got lucky or whatever. It was a bigger move than expected, but overall, I had put these words in here before price hit there, and I said, like to see this, and then the big drop, and boom, that's exactly what we got. Okay. Now, where we are right here, you guys can see this is where we open up this morning. We came into a trendy edge. And remember, guys, if you don't have the indicators, and look, I'm going to be very upfront with you. Indicators are great. They're a convenience. You don't absolutely need them or anything like that to trade here. But they are a convenience. And when you do really well, we probably have 90+% of our members who have the indicators. And so it just makes things a lot easier. Once you learn the methodology, then you know how to trade these, okay? But you can see that we came into the trendy edge, which is that purple line. Look, when price is above it and it comes down to it, we're looking for it to be supported. We went long in the futures. We made about 50 points in our futures to the upside. I'm still holding them because I'm brave and I like to lead by example. But this could get cut off. We don't know. But one thing that I like to do is I like to take the gap here and then place my Fibonacci's. And you can see that we close at the 38.2 perfectly. In the trendy room, we call this the bearish channel. I don't need to go into more detail with that, but this is a big level. It needs to get up and over 6,015. It couldn't do that. So tomorrow, if we can, then look for prices to move into the 30 to 50 level. And I would imagine we probably stall there if we get a bullish move. Okay. If we get the bullish move, we'll stall there and then we'll wait for some reports and Jerome and all that good stuff, okay? If we start to break down below the lows, look for a move back down to 59.40 and then maybe finishing the week down all the way down here at 58 and a half. So those are things to look forward to. If things go really well, then I would expect to move back up to 60.85 to 6100 before this week's close. Another thing that we're doing is we're actually closing out the month. So remember that you got Chair Fed Powell coming in. Um, you have Mag 7, and then you have the end of the month, and plus today's big event. So a lot of things were reset, which I really love. So that was the S&P, and I will show you. Let's see, was there anything else that I wanted to show you? I mean, we have a lot of awesome leap trades on, so make sure you look at the notes to see those. And if you're interested in coming to Simpler to see what it is that I do, I teach supply and demand. I am a professional supply and demand trader. I do believe that everybody can use this in their arsenal of indicators, whatever it is you use. The edge that we have is we have these levels before price gets there and we execute not after the fact, right? That was the big lesson that I was teaching everybody this morning is we don't sit around and wait for things to happen. We take action at the levels. And then most of the time we're reaping the rewards or the benefits when other traders are kind of sitting on their hands trying to figure out what to do. Okay. So if you're interested, please come and visit simplertrading.com. You guys can check me out there. You will see, you can go over, when you go to simplertrading.com, just look me up. My name is Jonathan McKeever, or just look for Trendy John. And again, I run two rooms at Simpler. So I have an SPX alerts only room, and then I have the Trendy Trading room where Melissa and I trade together. Okay, and we teach in there. So SPX, I mean, I teach through chat and that type of stuff, and we have a robust support, in there. But if you want the education, then come to the Trendy Trading Room. Okay. All right. I appreciate you guys. Have an amazing day, and I hope you did really well today.